Hi everyone, this is Matthew Cruz at Comstock Investments. I'm going to be sharing with you the December 2022 supply demand report that came out this morning at 11 a.m. Let you take a quick look at our disclaimer. Futures trading does involve risk. So not a lot of fireworks today in the crop report update. They changed very little. You can see here they left all the numbers the same in terms of production. The yield stayed there at 172.3, and they left the bean yield untouched at 50.2. Breaking down the grain ending stocks, corn came in at 1.257 billion bushels, so slightly above what the average trade was looking for, and a lot of that was just because of the exports. The trade has been talking for a long time now, beating the drum about how exports are pretty dismal, and they were expecting another cut, and that did happen, perhaps slightly more than what the trade was expecting, but not by much. So that's why we came pretty close to what the average trade was expecting. Then again, they left the soybeans and the wheat completely untouched, and so the trade was actually expecting them to boost the ending stocks a little bit in the soybeans, and that did not happen. And so it was maybe slightly bearish in the corn and slightly bullish in the beans for the report today. So they maintained that 220 million bushel level, same as last month, and similar in the wheat, may maintain that 571 million bushel ending stock number, same as last month. Similar with looking at Brazil, they kept the Brazilian numbers the same. Like CONAB has been increasing some of these production numbers in soybeans up to 153. The USDA kept theirs at 152 million metric tons, same as last month. Corn stayed at 126 million metric tons, same as last month. They did also keep the Argentinian soybeans the same, which I think surprised a lot of people a little bit just with the drought that's going on there. So they kept that at 49.5. I think you'll see both of these numbers get trimmed here into the future. Now, last year at this time, we know that they went through a drought similar to what they're going through this year, and they really didn't start making bigger cuts until the February report. And so I think you'll see those numbers get trimmed, but USDA was prepared to do so here in December. I also thought it was notable that they did decrease the Ukrainian corn production by 4.5 million metric tons, from 31.5 to 27 million metric tons. And so what that says to me is despite the grain corridor being open, that the conditions in Ukraine are not conducive to producing good trendline yields there with the ongoing war. There's lack of inputs, lack of diesel fuel, lack of electricity, and lack of credit. And so with all those things, it's just hard for us to see that them producing a normal crop in addition to their exports being hampered. So just wanted to point that out. Looking at global ending stocks, the corn was just under what the average estimate was looking for at 298.4. Soybeans were kind of right on the nose, this 102.7 compared to 102.6. And wheat also, they did a good job of guessing what the wheat was going to come in at, and which was 267.3. The Chinese imports for corn and beans were left unchanged at 18 and 98 respectively. So in the corn balance sheet, this is the only thing that changed. They reduced the exports by 75 million bushels, and that's where we tack that on here to our bottom line ending stocks, this 1.257. So yield, feed usage, ethanol consumption, all of that was left the same. So this is how we tack on that 75 million bushels. And then they made it easy on us here for soybeans and wheat. They left everything completely unchanged. And so maintaining that low ending stocks is 220. Trade was expecting a modest boost there to 240, and that didn't happen. So that's why it's kind of a moderately bullish for soybeans today. In the wheat, similar situation, left everything completely unchanged at this 571 million bushel level. Taking a quick look at the March corn chart, you can see here, charts are not looking very good. We've been drifting lower here now since November 1st. We've got a modest boost here. We're hoping we get another rally, that we're getting ready to target more sales here. And I think we're taking into consideration the poor exports. We're wanting to advance more sales, and so we're targeting the 665, 670 area right in here. That will bring us closer to 50% sold for the year. So we're looking for another bounce here, kind of similar to what we saw here in mid-November. But if things don't turn around, it's quite possible we could drift a little bit lower for quite a while. We need more bullish information, and it's not happening. I think with the market's going to start looking a lot more towards Brazil as their crop progresses, and so far they've been getting excellent rains, and so that means that they're going to have a pretty decent crop. Is how it's looking right now in Brazil. Looking at soybeans, yesterday we did make another sale at 14.90, so we did trade up to 14.92 yesterday, and so that brings us to 50% sold in our soybeans. And so we can see here right at the top of the trading range here for the last 6 months, basically. And so yeah, we'll continue to monitor that. And but the soybeans long term are looking a lot better than the corn is, and so hopefully the soybeans can pull the corn prices up with it. Looking at the wheat's looking pretty ugly, as you can see here. We had a nice rebound here back in October, kind of peaked at this 960, and then we've just been more or less drifting lower here, by 5-10 cents a day ever since then. And so, we're at this 740 area right now, and we're just looking for the market to carve out a bottom, and we haven't seen it yet, but we're looking for more confirmation of that. But it was bad news. We broke below the support here, right at the 760, and so that kind of signals that we're likely going to continue to drift lower. So and we continue to monitor that. Now, if you're a bull, you're going to point out that inflation seems to be slowing, and the Fed could be pivoting here very soon. The Ukraine war, is ongoing, and is going to kind of diminish the production capacity in that country, that I think the trade and the market is sort of minimizing and marginalizing. They're just focusing on what they're able to export, and they should, also be focusing on what they're able to produce. And the market seems to be under the assumption they're going to be able to produce the same amount as they have in the past, and I don't think that's going to be the case. So bulls would also point out that the drought is lingering in the Western Corn Belt and the plains, and we need some large, widespread soaking rains to turn that around. And at 1 inch, 2 inches isn't going to cut it. We're basically have spent our soil moisture reserves getting us to the end of the 22 season. There is a drought going on, mostly in Argentina. It's impacted southern Brazil a little bit, but not too much. It's mostly in Argentina, and I think you will see cuts there. And you can talk about the basis levels indicate that there is low inventories, crop inventories, and a lot of the elevators especially in the Western Corn Belt. If you're a bear, you're going to talk about, of course, the corn exports have been very weak. That's the only change that we saw to the market today. The USDA cutting those exports. Our corn just is not priced competitively in the world. The cheapest corn right now in the world is Brazil, and they're going to continue to export all of their excess corn. However, they've already exported most of it, so they're going to run out of corn here pretty soon. So we think starting in January, we're going to see that start to shift, where buyers are going to come back to the United States just because Brazil is going to run out. Of course, you'll point to rising interest rates, that the Fed may not be done raising interest rates, and that could continue to weigh on the U.S. economy. China, is having a lot of troubles with their COVID protocols and shutting cities down, and so that's potentially hurt consumption and their imports a little bit. And then of course that US dollar, has been rising as in conjunction with inflation, and that hurts our exports and makes our exports uncompetitive when compared to places, especially like Brazil. So I want to thank you for watching. As always, if you have any marketing questions, give us a call at Comstock. Our number is 712-227-1110. Thank you and have a nice day.